Welcome everyone to Vested Interest. This is Shane back again for another stock pick of the day. Today we're going to take a look at one that's actually in my portfolio. I feel like we haven't touched one in my portfolio in a while. LyondellBasell. This is out of the materials sector. It is May 24th. Let's jump right in. If you want to know more about this company, check them out at www.lyondellbasell.com. That's LyondellBasell.com. About us, LyondellBasell, ticker LYB, out of the materials sector, is a leader in the global chemical industry. LyondellBasell strives every day to be the safest, best operated, and most valued company in our industry. The company's products, materials, and technologies are advancing sustainable solutions for food safety, access to clean water, healthcare, fuel efficiency in more than 100 international markets. LyondellBasell sells products into more than 100 countries and is the world's largest producer of polymer components and the largest licensor of polyethylene technologies. Our materials and technologies are advancing solutions in food safety, access, clean water, clean air, and fuel efficiency, quality healthcare, and sustainable and modern living. So they have their hands in a lot of different products. As you can see, 100 international markets, 100 countries here, chemicals, polymers, advanced polymers, fuels, different technologies. So they are involved heavily in a lot of different products. You probably use some of their products and don't even realize it. Again, if you want to know more about them, check them out, www.lyondellbasell.com. That is their homepage where I pulled this information from. Now the fun part. They were down 1.3% on the day, closed out the day at $89.55. We are talking about LyondellBasell Industries, ticker LYB, out of the materials sector. 52-week range as low as $71.46, as high as $117.22. I'd love it if they continued to drop back towards this $70 range here. Average volume 2 million. Today's was 1.2, and you can pretty much see, even though it was a little choppy, pretty much a sell-off throughout the day. Market cap of $29.128 billion, a beta of 1.22. So you can see that volatility throughout the day, and they are more volatile than the overall market. Price to earnings ratio, PE ratio, is sitting at $9.66 per share. Earnings per share, EPS, is $9.27 per share. Low price to earnings, very nice earnings per share. Next earnings date is going to be somewhere between July 27th and July 31st. Forward dividend is $4.82 on the year. Divide by 4 because they are a quarterly payer. We will see that here in a little bit. Very nice dividend yield on this one, 5.31%. Obviously, if they continue to pull back, that yield will continue to climb. Ex-dividend date is coming up May 26th, so if you were to buy them tomorrow on the 25th, you would be in line for the next dividend. Don't wait till the ex-dividend date. You need to buy them a day before it. And according to Yahoo Finance, they have a one-year target estimate of $99.08. So it does speak to some potential upside appreciation in the stock price. Now, if you've watched my videos for any length of time, you know I always recommend getting further into the weeds on these. You want to know more about the company than just the high-level stuff. Get into statistics. One of the metrics I like to look at, dividend yield theory, you'll find that under statistics. Go down to dividend splits. Look at their 5-year dividend average, right? This 5-year average dividend yield, 4.93%. You compare it to their forward annual dividend yield or the current, they're the same number. And if the forward annual dividend yield or the current annual dividend yield is higher than their 5-year average, which it is, it speaks to some potential undervaluation here. If this number was lower than the 5-year average, and you can use 10-year average if you prefer, these are just the numbers we have in front of us from Yahoo Finance, and then it would speak to some overvaluation. So again, 5-year average, if the current is over, it's undervalued. If the current would be under the 5-year average, then it would be potentially overvalued. So this one, according to dividend yield theory, is potentially undervalued. Payout ratio, very nice payout ratio on this one, 51.35%. We'll back check this with our other source here in a minute. Again, you can see the ex-dividend date and the dividend payout date will be on June 6th. Now, another one I like, if you go under financials, you'll find their balance sheet, their income statement. You want to look at their balance sheet and income statement, make sure revenue is growing, make sure debt's decreasing, make sure they have enough assets to pay off all their liabilities. Make sure they're not depreciating you as a shareholder. So that means issuing more stock than they are. You want them buying back or keeping the stock levels the same. And free cash flow, that's the important one. That's what the dividends are paid out of. So under financials, you'll find free cash flow going back to 2019. You'll see $2.2 billion here. It was a drop from 2019 to 2021. Or 2020, I mean, $1.4 billion, and then from 2020 to 2021, big jump up, $5.7 billion, and then another drop here in 2021 to 2022 from 5.7 to 4.2 billion. We'll have to see what they do here, but this is overall from 2019 to 2022, growing free cash flow, even though it's up and down a little bit. You want to watch this one. This is a bit of a cyclical company, so they do that. just so long as it's pretty much consistently growing over 1 year to the next. Even if you see a down year from 1 year to the next over a 4-year span, you want to see that growth. And we'll have to see what they do here in 2023. When this earning date comes out in July, we'll want to take a look at this one again. And they are repurchasing their own stock, so that means that they are helping you out as a shareholder. You own more. The more they repurchase their stock here, the more as a shareholder you own. This is all brought to you by Yahoo Finance, not affiliated, just one of the sites I like to look at. And then I always recommend more than one site. So another one that I like is stockanalysis.com, and they have 20 stock analysts that have taken a look at this. They call it a consensus hold. Now, I would agree. You'll see my cost basis here in a minute. I am waiting for anything under my cost basis. It's not quite there, but it is heading that direction. Hopefully it gets there. It looks like a little bit further down in the after hours. Like I said, I'd really like it back in the low 80s, even back in the 70s range. I would really pick up probably a big chunk if it dropped back in the 70s. So they have a low estimate here of $70, so that may be where it's headed, and that would be a 21.83% decrease in the stock price. They have an average estimate very close to what we saw from Yahoo Finance, $99.85, which would be an 11.5% increase in the stock price, and a high estimate, if it happened to hit there, $121, that would be a 35.12% increase. All the while, you could collect that 5+% dividend yield. So agreed on this one, it's a hold, starting to look attractive, but not quite there yet. Now, this provides a lot of the same information, just in a different format that Yahoo Finance did, or any site that you look up, really. You can go back into the financials, statistics, which is where I pull in forecasts, which is what we're looking at. And statistics, one of the things I like to look at under there for this one is return on equity, ROE, and return on invested capital, ROIC. I like 10% or better, so you can see ROE is sitting at return on equity 24.4%, well above the 10% threshold I like, and return on invested capital just over that 10% at 10.70. So I like both of these numbers. You could also compare this to their sector average. Other companies in the sector like Celanese, for example, you could compare and see what their numbers are as well. Now, this is where I typically tell you if I do have a position, this is where I'll show you. I am long LyondellBasell, ticker LYB here. I do have 111.333 shares. My cost basis is $87.69, so I would be interested in anything under my cost basis. Really, like I said, I'd like it in the low 80s, and back into the 70s would be ideal. Right, it's currently 89.53, so not quite there yet. I am up 1.74% on this. Right, I have $9,763.08 into the position. It's currently worth $9,967. Not that that's important. Stocks go up, stocks go down. It's really about the dividends paid out. As we said, they are a quarterly payer. They pay out on that March, June, August, November timeframe. And they are currently paying $1.19 per share. And I wanted to show you something here. I went back a little further. Last year, they raised their dividend up from $1.13 to $1.19, which is where they currently sit. But they also paid a huge special dividend here. This was their regular dividend in June, and then they paid a big special dividend here in June as well last year. So that was very nice to receive. I did receive that. It was a big chunk of change there. Very nice to see that. Sometimes they do that. And with them raising it last March and that special dividend in June, I would think that perhaps the next payout will be the raise if they want to continue this. If not, we'll have to wait for the August timeframe to see if they raise it up there. But they should be getting close to raising this up if they want to continue that dividend growth streak. Again, 51.52% payout. Very nice. Anything under 75% is good in my opinion. And dividend growth of 5.31%. Nice growth on this one as well. So high dividend yielder at over 5% as well as over 5% growth. Nice to see. This one is in my portfolio, and like I said, at the right price, I want to add some more under this 87.69, preferably back in the 70s or low 80s. This is my investing criteria. If you want to stop it here and go through this, you can do that. And really, that is it. Trying to find value in the market. LyondellBasell, let me know what you think down in the comment section below. Is it one in your portfolio? Is it one you're watching on your watch list? Or is it one you're avoiding altogether? Do you even like the material sector? Some people avoid that one altogether and stay in other sectors. I tend to like it, but that's just me. Well, as always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join the vested interest community, trying to build a like-minded community of dividend growth investors so we can share our experiences, stocks we're watching, stocks we're avoiding, stocks we're looking to buy, and maybe what prices we're kind of watching them at. All the information about dividend growth investing. If you're into that, again, hit that subscribe button down below and join us on this journey to financial freedom. And drop a comment. Let me know what you think of the video. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So go ahead and drop them all down there. If you have a company or stock you want me to cover in the Stock Pick of the Day series, put it down there and I'll work it into the rotation when it pulls back on a day. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by, and we'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion. Investing journey for educational and entertainment purposes. Investing involves risk and bonus. You should never invest any amount not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice and counsel of a certified financial advisor.